So the latest Halifax House Price Index has been released this morning, covering the period up to March 2024. If you're watching this video on YouTube, then there will be a link in the notes to the video where you can go and find the report to have a read. If you're watching this on any other platform, then I suggest that you maybe do go have a look at the YouTube channel, because that's where most of the in-depth data and link will be found. So I'm not going to go into this report itself and then look in the finer detail. I'm just going to take a quick look at the core headlines for you and just then provide you with a little bit of background on what we're seeing in the market right now. Now, just as a reminder, a couple of days ago, we did cover the nationwide house price index. Their monthly figures showed a slight decrease in property prices, but over the course of the year, they were showing an increase in property prices. Let's have a look at the Halifax data. So, average house price in the UK, just under £288,500. The monthly change, negative 1%, quarterly change, positive 2%, and annual change, plus 0.3%. So although these numbers were different from what we saw with the nationwide, they are still showing a similar direction for house prices on a monthly and yearly basis, which shows that there is consistency in the data that we're seeing. Again, a quick reminder for those of you that are going to make a comment on this, the Halifax and the nationwide house price indexes are based upon real live data from very recent times with mortgage applications. They are only from their own mortgage customers, so they don't cover cash purchases and the rest of the market. For that information, we need to focus on the land registry data. But these reports from the Halifax and the Nationwide do show what's happening on the ground right now. So Kim Kinyard, director at Halifax Mortgages, she said UK house prices grew in March on a quarterly basis by plus 2%, with annual growth slowing to plus 0.3%. from a 1.6% in February. Compared to last month, the price of a UK property fell negative 1%, or in cash terms, that's £2,908. with the average property now costing $288,430. That a monthly fall should occur following 5 consecutive months of growth is not entirely unexpected, particularly in view of the reset the market has been going through since interest rates began to rise sharply in 2022. Despite this, house prices have shown surprising resilience in the face of significantly higher borrowing costs. Affordability constraints continue to be a challenge for prospective buyers, whilst existing homeowners on cheaper fixed rate deals are yet to feel the full effect of higher interest rates, and we covered that in a video yesterday. This means that the housing market is still to fully adjust, with sellers likely to be pricing their properties accordingly. And in other words, that means that people that are selling their property are actually pricing them more realistically rather than overinflating what they think their property is worth. And that's where good estate agents are worth their weight in gold. Financial markets have also been less optimistic about the degree and timing of base rate cuts, as core inflation proves stickier than generally expected. I have to disagree with that fact. Yes, core inflation has been sticky, but I think you're going to see going forwards that that's now going to be also on its way down, which is a good sign as well. This has stalled the decline in mortgage rates that had helped to drive market activity around the turn of the year. And again, I'm going to come back to that in a second. The broader picture is that house prices are up year on year, reflecting the opposing forces of an easing cost of living squeeze. Now that pay growth is outpacing general inflation and relatively high interest rates, taking a slightly long-term view, prices haven't changed much over the past couple of years, moving in a narrow range since the spring of 2022 and are still almost 50,000 higher than pre-pandemic levels. Looking ahead, this trend is likely to continue. Underlying demand is positive as greater numbers of people buy homes, demonstrated by recent rises in mortgage approvals across the industry, underpinned by a strong labour market. And with rental costs rising at record rates, home ownership does continue to be an attractive option for those who can make the sums work. However, the housing market remains sensitive to the scale and pace of interest rate changes, and with only a modest improvement in affordability on the horizon, this will likely limit the scope for significant house price increases this year. So, a couple of things to pick up on this. Recent activity. This is something that I mentioned in a video recently as well. We are starting to see a lot more inquiries from people, from first-time buyers and people wanting to move home. So things are starting to improve. People have got used to the fact that we're in a higher interest rate environment and they're just accepting it. So from what we can see, things are set to improve later this year. Now, the kickstart to that is going to be the base rate cut. Halifax have talked about sticky core inflation, and whilst I agree to a certain extent, I also feel that the numbers that we've been seeing have shown that core inflation is also on its way down, which is exactly the news that we want to hear. And that's likely to mean that the Bank of England are going to be more favouring of a base rate cut. And I also saw a report yesterday that was saying that the European Central Bank are eager to start cutting rates before the Federal Reserve in America, and that the UK are also likely to follow. So will that first rate cut come in May, or will it come in June? That remains to be seen. But all in all, despite some of the negativity in these comments, actually, I believe that the market is a little bit more positive than what this suggests. So if you are in the market to purchase a property right now, it might be the time to just get on with it and do it. Speak to a mortgage broker like ourselves. There's lots of them up and down the country that will be willing to help you. They can guide you on your affordability at these higher interest rates, just to prove to you what you can borrow, what you can afford to buy, and how much that's going to cost.